You are asking a simple question. How much money do I truly need to make $5,000 a month? Let me be direct. This is a fantastic question. It is the beginning of taking control. So many people float through life, vaguely anxious about money, but never stopping to ask for the actual number. They worry they are behind. They worry they are not doing enough. They worry that everyone else has it figured out. You are taking a different path by asking for a concrete answer. You're not crazy for asking this. In fact, you are smarter than most for wanting a real number instead of a vague feeling. Before we dive into any calculations, we need to define our target with absolute clarity. The number 5,000 is not as simple as it sounds. Your first decision is to determine exactly what this figure represents for your life. Does 5,000 a month mean your gross income before taxes? Or does it mean the net amount, the actual cash in your bank account? For most people, the after-tax number is what truly matters. That is the money you live on. Throughout this essay, we will assume you mean 5,000 per month after taxes. Think about the life you want to live with this money. Single person in a low-cost area, family of 4 in an expensive coastal city, bare-bones survival budget, or a rich life with travel, hobbies, and generous spending? Be honest. Writing down what this 5,000 will cover is a crucial step in making the goal feel real and personal. Once defined, you can see how it fits into the bigger picture. This number becomes your North Star. Example: current take-home pay is $3,500 a month. Gap to close, $1,500. It's a specific, measurable problem you can solve. This journey starts with one fundamental idea. You are in the driver's seat of your financial life. No one cares more about your money than you do. Not your boss, not your bank, and certainly not some random influencer online. By asking this question, you have already grabbed the steering wheel. Now, let's look at the map. We will break down the routes you can take to reach your destination. Whether you are 25, 35, or 45, there is a path for you. So take a deep breath. Let's get you the answers you deserve. You need a target, you need a plan, and you need to start. This essay will give you all three. Forget what you see on social media. Forget the get-rich-quick schemes. We are going to talk about the real, boring, and incredibly effective math that works. Now, Route 1. The most straightforward way to have 5,000 a month is to earn it through your work. There is no magic here, just practical math. If your goal is to take home 5,000 after taxes, you need to know how much you must earn before taxes. A conservative estimate is 20 to 30% to taxes and deductions. Let's use a 20% effective tax rate to keep the math simple. If 5,000 is 80% of your gross pay, then your gross pay needs to be 5,000 divided by 0.8. This equals 6,250 per month. On an annual basis, that is 75,000 per year. This number becomes your target salary. A standard full-time job is about 40 hours a week for 52 weeks a year. That's 2,080 hours per year. 75,000 divided by 2,080 equals approximately 36 per hour. You are looking for opportunities that pay 36 per hour or more. Acquire skills, negotiate your salary, look for better paying jobs, or start a side hustle to bridge the gap. If you currently earn 50,000, it is a 25,000 gap. You can break that down. Could you get a 5% raise for 2 years in a row? This is the mindset of taking control. There is another path to getting 5,000 a month. This is the path of the investor. Instead of trading your time for money, you use your accumulated capital to generate income for you. This is often called passive income, though it requires very active saving and planning to set up. This is the core concept behind early retirement. You build a large enough pile of investments that the returns can pay for your lifestyle indefinitely. This frees you from the need to work for a paycheck. Your invested money in stocks, bonds, and real estate generates returns, dividends, interest, and appreciation. Over time, thanks to compound growth, small, consistent investments can become a substantial nest egg. Start saving and investing systematically, no matter how small. Think of it like planting a tree. Water it regularly, your monthly savings, and let it get sunlight, your returns. For years, progress seems slow, but roots deepen. One day, the tree provides shade, security, and fruit income. It is a long-term game that demands patience, discipline, and ignoring short-term market noise. So, how big does your investment portfolio need to be to generate $5,000 a month? This is where a simple guideline comes in. The 4% rule. It is not a law of physics. It is a robust rule of thumb stress-tested for decades. The rule states you can withdraw 4% each year, adjust for inflation, and likely have the money last 30 years. Let's apply this rule to our goal. 5,000 per month times 12 months equals 60,000 per year. According to the 4% rule, $60,000 is 4% of your required nest egg. Do the reverse math. Divide 60,000 by 0.04. 60,000 ma 0.04 ma $1,500,000. There it is, the number. That number can feel intimidating, but don't let it discourage you. This is your target, the peak of the mountain you're climbing. Seeing it clearly is step 1. Some prefer more conservative assumptions. 3.5% or even 3% might feel safer. Quick math. 60,000 divided by 0.03 equals $2 million. Safer withdrawal equals larger nest egg. The choice is yours. 4% is a great starting point. Adjust for your comfort with risk. The idea of saving $1.5 million can feel daunting, especially if you are just starting out. But here is the good news. You do not have to choose between only earning or only investing. There is a powerful third option, the hybrid path. This is where you combine part-time work or a small business with income from your investments. This approach dramatically lowers the amount you need to have saved, making financial independence or early retirement accessible much sooner. Let's go back to our goal of $5,000 a month. Imagine a part-time job you enjoy, or a small online business that brings in $2,500 a month. This covers half of your income needs. Now your investments only need to generate the other half, $30,000 per year. Apply the 4% rule, that's $750,000. Your target nest egg has been cut in half. This is often called Barista Fire or Coast FI, and it offers incredible psychological benefits and resilience. How fast you can reach your goal depends on your savings rate and your investment return. We will assume a 6% average annual return after inflation. These are not promises, they're planning numbers. Example A, the 25-year-old starter. Save $500 per month for 20 years. By 45, $231,000. A fantastic foundation and an unbreakable habit. Example B, the 30-year-old accelerator. By 50, $693,000. Very close to the $750,000 hybrid target. Example C, the 35-year-old power saver. By 55, $924,000. Beyond the hybrid target and on track toward full retirement. Starting later but saving more can help you catch up. Time and rate both matter. Time is your greatest asset. Increase savings as income grows and the number rises. It is never too late to make a significant impact on your financial future. As you look at these numbers, it is normal for anxieties to surface. These are worries almost everyone has. You are not alone. Anxiety. I'm so far behind. It's too late for me. Answer. The best time to start was yesterday. The second best time is right now. Anxiety. I don't earn enough to save anything meaningful. Answer. Work both sides. Increase income and reduce expenses. Anxiety. Investing is too risky. I could lose everything. Answer. Not investing risks inflation. Use low-cost diversified index funds for the long term. You are not betting on one horse. You are betting on the entire race of economic growth. Over long periods, this has historically been a very successful bet. You have absorbed a lot. We move from a vague question to a concrete number and clear paths. Knowledge is good, but action creates change. Take 5 minutes right now. Open a document or notebook and write exactly what $5,000 after tax means for you. $1.5 million for full retirement, $750,000 for a hybrid approach. Write your number down. Second, pick your primary path. Choose one to focus your energy. You can change later. Third, and most important, do one thing. If earning more, apply to one job. Update one line on your resume. If investing, set an automatic transfer of just $50 a month. The amount doesn't matter. The action does. This first drop will carve a canyon. You can do this. The math is a flashlight that cuts through financial fog. Start with one step, then the next. Keep going.